Following is a presentation of TFNN. It is now time for the Trader's Edge. Now, Steve Rhodes.
Good morning, Money Masters and Treasure Hunters. Welcome to the Trader's Edge. I'm your host, Steve Rhodes, and thanks so much for joining me, folks. The Kool-Aid stand is open. And even though today is June 29th, in the markets, it's our July 4th version of the markets. It's fireworks galore out there. You got the Dow futures up about 190 points, the ES Mini up 24 points, NASDAQ up 47, Russell 2000 leading the charge on the way up 2% already in the pre-market. And folks, I treasure your presence here today. My outcome is to help you to become a better money master. I am here to inspire you, but mostly to help lay the groundwork so that you can lead an inspired life. Because leading an inspired life, folks, that is what it's all about. So think about this, because, we've had, I mentioned yesterday, the day before, today is the 19th Euro Summit, I believe. And I said that what it is a PR machine, a public relations machine. So I thought, since that's what I said, why don't I just follow up on that just for a moment before it is that we go take a look at the markets out there. And it's really all about the truth, right? It's all about the truth. And very few of us, speaking for myself, very few of us are authorities on the truth. I don't consider myself to be an authority on the truth, but about the closest thing that any of us really get to the truth is what we hope is the truth, isn't it? It's what we hope is the truth, what we think is the truth out there. And that's why the best approach to truth probably for me is to say, and you should write these words down, it seems to me, and then ... It seems to you what? Because what you should do is you should go out there, and what does it really mean to you? Because well-chosen words, folks, and this is the power of a public relations machine. Well-chosen words, folks, mixed with measured emotions, that is the basis of affecting all people. We get to take a look at these markets and see the effects on the people out there. Think about it like this, folks. If you were a money manager coming into the end of the quarter, not just the end of the month, coming into the end of the quarter. Today is the end of the second quarter, folks. How happy would you be that the markets were up? And if you had written it down from May 1st and you knew that there was distribution in the marketplace, names like Chipotle, Advanced Auto Parts, Auto, Zone, Panera Bread, you just start naming them, stocks where we can absolutely see institutional selling. Did they all get it wrong yesterday, folks? Did they all get it wrong? Seems to me you should say, something to think about. Well, our call number is 877-927-6648, and it's Friday. It's not just Friday, it's Fantastic Friday. On Fantastic Friday, we do the Nadex Trading Hour after this show. Then we go to Basil Chapman, Nico DeHaan to keep you healthy, folks. 3 to 4 back here for the David White Band, and I believe sitting in for Tom O'Brien today, Ken Shreve and Kate Stalter. Don't recall who's doing the first hour and second hour, but that is the lineup for today. Again, 877-927-6648. So let's go get to these markets. Let's go. The truth is really out here. It's really the truth is in the markets. Let's go take a look at the numbers, because I'm sure you're wondering what the heck is going on. Let's go see. Let's go take it. Today, we're going to talk about descending tops lines, because that's really what is going on consistently inside the marketplace. We're going to start simply with the daily charts. Forget about the intraday charts here right now. If you take a look at the daily charts, we're taking a look at the ES Mini, and I'm just simply going back to May, Dan. Going back to May 1st, we're talking trend lines. These are not channels. So on trend lines, what you're using is the actual top of the bar or the top of the candle. You're not using the actual body. So the top of the bar on the May 1st trend line for the ES Mini is going to be right up at the 14.1175. Your next two touch points really work on either June 19th up at 13.57 or June 20th up at 13.55.50. They both hit each other. In fact, what happens, folks, is if you take a look at the next day, June 21st, that is the top of the trend line. What you do see right here, right now, is you see that the ES Mini, that's what it is taking on. It's taking on that trend line, and next up is running into horizontal resistance. Now, there's really a couple areas that you could draw on your charts that you should draw on your charts here, folks, and you want to take a look at the April 10th low, just simply draw a horizontal line above that. That's going to be an area of resistance, and certainly the downdraft of June 21st. Now, the high of that happens to be very close, really, to the April 10th low. So I just say just use that area. Maybe it gets up and it tests the high of June 19th up there at 1357. Now, you break this trend line. And you can say, hooray. You can say that all of those money managers out there, that all of those institutional sellers, they got it wrong the last several days, maybe the last week. They shouldn't have been selling all that Chipotle, even though we know that's an A to B equals CD down and has a lot further to go. Now, let's go take a look at the other futures contracts out here. This is the easier place to see where the lines are drawn in the sand. If we go over to the indexes, you wouldn't know what's really going on. You wouldn't be aware of what's going on in the pre-market, the post-market. Take a look at the Dow futures. Dow futures, we're going to start right up here. May Day again. You're going to see that trend line, folks. It hits the next session. Well, it's a session on May the 3rd up at 13,248. The May 1st high was 13,284. You hit 13,248. How about that? Because I thought maybe I was dyslexic here. And that is on May the 3rd. Your next trend line date you're going to hit is June 19th. That's out at 12,829. What you can see here, Dow futures doing what they're supposed to do on any kind of pop. They're running into overhead resistance right now. If we take a look at that April 10th date, you can see they're above it. But take a look at the overhead resistance that the Dow is running into right now. You get a close above that with conviction, folks. And I'll say, you know what? All of those money managers, all of those institutional sellers out there, they didn't know diddly. Bo Diddley I'm referring to out there, and they probably didn't know Bo Diddley. Now, if we go take a look at the Russell 2000, because that in the futures market, folks, that is up a couple of percent, 2.14% right now. Now, what I'm going to do here on the Russell 2000, I'm going to go back to the highs that it made March 27th. Now, the highs out there in the futures contract, $8.50 and 60 cents. And where are you going to hit next? May Day. May 1st, of course. The May 1st high out there at 8.29 even Steven. You can see that even though the Russell 2000 futures are up big, they haven't made it to the top of their trend line. Something to think about. Now, what you can also take a look at is look at this triangle that we have. Look at this wedge pattern. Now, this is kind of the interesting thing here, folks, because wedge patterns, when they resolve themselves in the direction of the original trend. What's the trend here? The trend, folks, is to the downside. Ouch, that's a stinger. Folks, I got the wrong clock up here. I thought it was, I got Tom's clock up. Thought it was at the end of the show. So let me just switch the clock so that way I know where I'm at. I was just like lost in the forest here. So when we come back, we're taking a look at the Russell 2000. So what you are seeing here, folks, you're seeing a wedge pattern, a long-term wedge pattern that exists out here in the Russell 2000. And wedge patterns, when they resolve themselves, they typically resolve themselves in the direction that it originally started. Well, this direction down here, folks, is certainly to the downside. So as I say, something to think about. Now, let's finish this off here. Let's go take a look at the NASDAQ futures, see what the NASDAQ is doing. NASDAQ certainly showing some weakness yesterday, closing down about 1%. Composite down almost 1%. Now, we're going to start off here with May Day, of course. The May 1st high out there at 27.53. Then we're going to hit the next trend line top out on June 20th. That high out at 26.2825. Oh, with the big move in the NASDAQ hasn't even come close to hitting the top of that trend line. And it also hasn't hit. There was another trend that was really established coming back to the June 4th area, the June 4th low. So you can put a couple of different trend lines here. That trend line from June 4th low up into the low here on June 14th, that was broke to the downside with conviction on June 25th. So there's a lot of Kool-Aid out there, folks. The Kool-Aid stand is open. I would serve you cans of Kool-Aid, but the cans have been kicked so far down the road that it would take us until the end of the year before we get the details. And that's the truth, because that's the information that's out there. You know, in small print, in fine print, what the European Union said is, we'll tell you how we're going to figure all this out come the end of the year, folks. Let's go to our first caller. Let's go to Rich in Orlando. Rich, thanks for calling. Thanks for holding.
Morning, Steve. How are you?
I am doing great. I'm all fired up.
I am.
Good. Now, you wanted to take a look at Bank of America. Tell me what it is you're doing out there and how I can help you.
Well, actually, from a conversation a couple days ago with someone else, you were talking about Bank America.
Okay.
And I had entered it yesterday at 760.
Oh, you're making some money today, my friend.
Yeah.
It's trading out at 798 was the last trade that fired off.
And that's really where the question comes in. I mean, in the short term, the thing really has quite a boost. What are we looking at? What's your perspective on it?
Let's go take a look at it. We're going to take a look at Bank of America, folks, ticker symbol BAC, and we're on the line with Rich in Orlando. And, Rich, I'm not going to be able to get to it all before we head into the break here. So what I want you to do is I want you to stay tuned, and when we come back, we're going to take a look at Bank of America, folks. It closed out at 774 yesterday, trading out at 799. Rich is up 3% already this morning. Rich, you're having a darn good Friday.
Actually, yes, I am.
Oh, that's great. We'll be right back. We'll go take a look at Bank of America.
Thank you.
See how it's going to handle the swing point out here from June 21st. 877-927-6648. We'll be right back, folks.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on TigerTV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pesavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing.
Stock market corrections are the number one reason that a buy and hold investment strategy produces the poorest results, and I have 73 years of data that proves it. Now, the good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. And if you're one of the 70% of American households relying on their 401ks and IRAs for retirement, you need the single strategy that is bulletproof against the turmoil of our stock markets. Go to the homepage at TFNN.com. Under Breaking News, click on Success is a Numbers Game to receive this must-have free report. This bulletproof strategy may be days away from giving the next signal. Don't neglect your retirement, and don't neglect this signal. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com to order your free copy of Success is a Numbers Game today. Implement the disciplines contained in this report, and success will be yours for the taking.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
It's that time of year again, and the Great Panther Silver Summer Silver Giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver Giveaway the whole month of June at TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow futures up 195, S&P futures up 23 around the world. You got the DAX up 215 points. That's 3.5%. FTSE up 110 points. That's up 2%. The Nikkei up 132 points, confirming A to B equals CD up last night, up 1.5%. The Shanghai is closed out up 1.3%. The Hang Seng up 2%. The IBEX over in Spain up almost 4% right now. King dollar down $1.38. Gold up $46. And we're on the line with Rich in Orlando, who got into Bank of America yesterday. Now, Rich, what price are you in at? Did you mention that to me? I forgot to write that down.
It was 760.
760. Okay, yeah. Okay. So we're going to do a couple
on the plus side, yeah.
Okay, yep. So we're going to take a look at a couple things out here now. What I have up on the screen here, folks, is the 10-minute chart for Bank of America. So we're going to help Rich out here, going to help him protect his trade here. And what I'm taking a look at first is two areas of two very strong areas. Should be on the 10-minute chart. Two very strong areas of support. Now it happens to be at the 761 price. So you're in pretty good shape there because you should have very limited downside potential in any event. And on the 10-minute chart, now until it starts trading today, things could possibly change. I don't expect that the market is going to sell off today, folks. I do expect that we'll see our markets close up. To what degree, we'll just have to wait and see what goes on volume-wise or pattern-wise. Maybe they're going to, in essence, close right around these levels where we're trading at right now. So I don't expect to see a sell-off today. However, come Monday morning, could be a whole different thing out there. So at 760, you've got some good. So 761, you've got good support. You also have, and you have it on two candles. You have it going into the close on the 25th. And the high out there was 762. That had 18 million shares. And then you have it at the open at the 940 time frame on the 10-minute chart yesterday down at the 761 area. So that, your stop on anything, I don't know where your stop is at, but I would put my stop at break even, 760. Mm-hmm. So automatically move your stop there. Now, where is it trading right now? Well, where it's trading in the pre-market, it's trading off at Bank of America. Last trade fired off at 798. Why 798? Well, you've got a lot of friends up there, Rich. If you take a look at the where it's trading, what you're going to see is you're going to see some decent volume. You see 20 million shares, the low of 801, the high of 814. So what you're going to want to see today is you want to see this thing close above 814. Mm-hmm. Okay? And if it closes above 814, then you just simply have to decide whether or not the profit that you've got, which might be, 4%, whether that was good enough trade for you in 24 hours, whether you want to take some off the table, whether you want to let it run. But that's how you have to trade it right now based on the information that I have here. If we take a look at the daily now, so that's on the intraday. And so we know why it's trading where it is trading right now, because there's a supply line out there, all right? And at least on a short-term chart. If we go take a look at the daily chart, what you want to see is Bank of America has a B point out there. That B point on an AB equals CD up happens to be June 7th. That had 276 million shares. As it got over it on June 19th at 248, not enough. 213 on June 20th, not enough. 226 on June 21st and pulls back below, not enough. 142 million on June 22nd. Not enough. So what you want to see today is you want to see, as you're holding on to this, as you're coming into the close in the trading session, you certainly want to see it stay above the price point of $7.90, which it shouldn't have any trouble doing that today. It's trading at $7.99 right now, and you want to see more than 276 million shares. On a day like today, that should be difficult to do, Rich. It's Friday before the July 4th week. Mm-hmm. A lot of folks yesterday, you could see that, you had some short covering going on yesterday. You had distribution in the marketplace with regard to, leaders that were out there. You had money managers that were just simply taking whatever profits they could coming into the quarter end. And so what you want to see, so if you can get more than 276 million today, that says, hey, this thing may want to trade hard. Now, you'd also like to see it trade into the most recent swing point, which is June 20th. That only has 213 million shares. So you want to see it close into the $8.02 area, more than 213 million shares. And then I would stay there. I would stay with the trade, or I would take some profits and something along the lines. Whatever it is that makes sense to you that you're going to feel good about.
What kind of a long-term price do you see if it would meet those parameters?
Well, I do like Bank of America because it's got volume up at the $9 area, $10 area. So I do like Bank of America for the longer-term play.
Thank you.
You bet. Thanks for calling, Rich. Dow futures are up about 196 points, folks. Give us a call, 877-927-6648. We'll be right back.
Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of tfnn.com. Futures and options trading involves risk and may not be appropriate for all investors. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to tfnn.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of tfnn.com and sign up now. TFNN has just launched our most exciting sale ever. If you purchase any amount of Tiger Dollars before Sunday, June 24th, you'll receive access to 7 live 90-minute webinars hosted by each of our technicians here at TFNN. Not only do you get a 20 to 30% bonus on your purchase as you normally do with Tiger Dollars, but with this one-of-a-kind offer, you get over $1,000 in added value completely free. Each 90-minute live webinar usually sells for $149, and you get all 7 of them absolutely free. Tom O'Brien, Steve Rhodes, Basil Chapman, Larry Pesavento, Ken Shreve, Dave White, and Kate Stalter, you get all 7 classes completely free. Whether you're an experienced trader or you're completely new to the markets, this sale is perfect for all levels of investors. Don't miss out on our best Tiger Dollar sale ever. Visit the front page of TFNN.com today and purchase your Tiger Dollars before June 24th. Don't wait and risk missing out on this one-of-a-kind offer. Act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. The Kool-Aid stand is open. Got the Dow up 190 points. S&P's up 21. Composite up 50. Small caps up 14. You got a neck-and-neck race. The composite up 1 8/10%. The small caps up 1.83% out there. Microsoft up 26 cents. Intel up 51. Google up $9. Cisco up 26 pennies. Apple up $6 and change. Now, what you did have here, I've got the Qs up on the screen, and folks, when you open up at the 0.618 retracement, 0.618 or 0.786 retracement, and especially of a index or an ETF, that takes huge energy to do that. Oftentimes, you actually see a sell-off there. So it opened up, if you take a look at the Qs, you opened up right on the spot. The actual number of the retracement, and the retracement that I'm talking about here is the one that goes from the highs out there from June 20th. That was out at 64.57, and the low is at 61.54. The actual 0.618, 83.41, where the Qs actually opened up was, 63.41. I just have to, blurry eyes. Must have been Sake Thursday night or something. And where the Qs actually opened was 63.37. Not too bad. 4 pennies away from that. So we'll see how this thing here plays out, because it is some Kool-Aid, folks. As I said, the can has been kicked down the road. The PR firm is out there putting out their shenanigans again. Now, what you did have on the Qs out here, if you are in a trade on the Qs, you put in a hammer candle. You put in one of Steve's hammer candles yesterday. The only ETF index, the only index to actually do that, and the low. That says that 61.54 area should hold. 61.53 would be the test that I'd like to see take place coming into next Tuesday, getting down to 61.51 maybe, testing that area on less than 58 million shares. Because now what you've got is you've got an island reversal. You've got the gap up with some decent volume, 58 million shares, as I said, on June 6th. Now what you've got down there is you got a hammer. You got hammer support. So that, folks, looks like a very... Now, that area gets broken, folks, and the market starts selling off or what have you. What I can tell you is that there absolutely is going to, there's going to be lower prices. Forget about trying to play a bounce to the upside here. So that area, you want to be paying attention. If there's a chart you want to be paying attention to, in my opinion, it is going to be the Qs out there. Because that actually, even though it's weak, even though as we took a look at the NASDAQ futures, even though it's weak out here, that shows you where the strength really is. And when that area gets broken, I think it says good night, Steve-O-san. Yeah, I'm pretty sure that's what it says. So if we take a look at, you got all kinds of things popping and dropping as well. Popping, you got Hillshire Brands, HSH, up 54%. Must be a buyout. What does it say? Hillshire Brands complete separation of its international coffee and tea business. So they are digging that up $10. That's 54%. So you got Google up 1.7%. That's up with $9. You got Apple right behind them, $6. Salesforce Innovation, CRM, up $5 and change. F5 Networks, FFIV. Some of these are some broken stocks out here, folks. They are up 5%. EOG Resources up 5%. Constellation, that is the Bud guys. That's not Bud. That is the other side of that trade, I believe. You've got Amazon up $4. Now, to the downside, you've got Nike. Nike leading the charge on the way down. Holy shnikes, they're down 10% right now, off $9.95, probably with volume. We'll go take a look at it. Then you have a slew of power shares and velocity shares. Yum Brands, the next actual equity down there, down $1.86. So that's kind of interesting. Yum Brands off 3%. Team Health off 0.5%. And the rest of them are really just a bunch of iShares. I'll have to get rid of just my screen so I can take a look at something other than iShares out there. Now, let's go take a look at the King out here. Let's go take a look at King Dollar, because King Dollar making a bearish engulfing extraordinaire. Right now, you've got King Dollar trading out at 81.71, folks, and you can see that this bearish engulfing, folks, is where you have the body. Now, it has to happen in an uptrend, and clearly you had King Dollar, which was in an uptrend, and the body of today's candle has to engulf the prior session. Well, you're not just, and if you take a look at the prior session yesterday, actually closed out at 82.88. Opens the next session 82.89, 1 penny. So you need to be at the price or a penny above it is great. And certainly you have engulfed the prior session. You've engulfed the entire week. In fact, you are very close to engulfing June 21st. That says that that'd be 1, 2, 3, 4, 5, 6 sessions. That would be one powerful bearish engulfing candle. I would say that the bounce that we are looking for to get up into the May 4th area in several of the indexes could, in fact, be underway. And the heck with any full moons that are out there next week. But I don't know, folks. I don't know. So you do have a bearish engulf, and you'd really want to see a confirmation of that on Monday. And so we'll just simply have to wait to see what's going on there. Now, yesterday I was sharing with you, folks, the downtrend channel in gold and silver. So we're going to go switch over to gold, and you can see how that baby held into the session yesterday. That downtrend channel, folks, now this is different. This is a set of channel lines as opposed to trend lines when I originally started the show off. So if you take a look at the channel lines, you're using co-located bodies, opens and closes. And the channel line here begins February 29th. David White's birthday. That's a leap year day. February 29, 2012. The high out there, the close is really where it starts at 1786. And you can see we've got more than 3 co-located opens and closes. Yesterday being another one, as you had the gold close out at 1552. Could not break that channel line, just as it has been trying to really ever since as it came back there was on June the 7th, and June 8th was really the big push down, which rejected that channel. Yesterday, you got the, and how do these channels work? How do they ahead of time know that they're going to work, where your trade, your back is up against the wall? Certainly, the back was up against the wall here. Now, where is it? You should be asking, well, where is it, Steve, that gold could trade up to? Where gold could easily trade up to, number one, the blue line out there, folks, is the 50-day. We're looking at a daily chart. That's the 50-day exponential moving average. The price right now on that is 1605. You've gotten up to 1601. So 1605 is easily game on. Where you should see gold bounce to is really the 200-day exponential moving average. So right now, that's computed at 1631. That's where I expect you will see gold trade up to. Could even do it today. Wouldn't be that difficult. And now, why do I say that? Take a look at how that 200-day exponential moving average also has held as a resistance line. It's been doing that here. The first time it got tested was back on June 6th. It was tested again on June 15th. Tested one more time on June 19th. So I expect that what we will see is that's where the line is drawn in the sand. So you can see you've got the battle in between the 200-day exponential moving average and this channel line here. Gold trying to get back into the channel line, says it doesn't want to. So we've got a little bit of what I'll call divergence out here, because you've got gold that gave us a long-term bearish signal, did that, back on May 15th. You've got the downtrend channel that certainly it was traveling in, breaks out of that, may be a real break to the upside here. Versus silver, high-ho silver, having a good day out here. You got silver up, silver out right now, up 96 cents out at 27.25. Now, how important is it for you to also put these channel lines or understand channel lines when you're taking a look at your stock trades? Well, take a look at this. So here's the same set of channel lines starting here on February 29th. Happy birthday, David White. And that is the open there is at $36.98. Now, silver has been in a long-term downtrend, a long-term bearish market. They got that confirming signal out in the middle of November, and that's when it was in the $37 range. Out there, I believe you had it up as high as $35 range. Trade out at $27.25 right now. So we take a look at this channel line here that I drew in here for you, and take a look at where silver actually bounced up to, folks. Bounced up to the top of that trend line or channel line, and which was also the swing point. The swing point that it tested yesterday, that swing point being December 29th. The low of that was 26.14, 32,000 shares. As it came down and it tested yesterday, did it with 46,000 shares. So it's got volume to the downside, wasn't able to break it. It did test it, bounces now today to the upside. Again, you're going against 32,000 contracts. What you have so far today is 26,000 contracts, but it gets up there. You can see how this area here today specifically really acted as a strong resistance area, because you've got a swing point that silver is trading in, along with this downtrend channel line out there. If we go take a look at light sweet crude, you got light sweet crude right now trading out at 81.61. Light sweet crude rejecting the swing point here from October 4th. That October 4th high is $78.40, 411,000 contracts. Now, it tested the low of that yesterday with 253,000 contracts, closed yesterday at the price of $78.46. The low of that swing point was $78. I apologize. The low was $74.95. So did not get down there, just tested the highs. The high of that swing point, $78.40. So it tested that swing point again. It's been testing that swing point here 1, 2, 3, 4, 5, 6 trading sessions in a row. So over the last week, and today breaking out to the upside. Now, on a bounce, let's just say that the bounce is underway. The euro's going to get stronger. I'm really wrong that it wasn't a PR machine. They really did fix the problems over in Europe. What you can see is you would see light sweet crude trade up to the $90.45 area. That is the dead cat bounce. That is the dead cat bounce coming off of the highs that go back to the $110 range, $110.55 on March the 1st. Now, what you also would really want to do is take a look at the retracement off of the C to D leg. That C to D leg beginning May the 2nd. Let's see if it's really May 2nd. May 2nd high, 106.05. May 1st, 106.43. So really off of the May 1st high out there. And if you do that, let's put the out there, your 0.382 gets you to 88.42. So your range for the bounce, if you were long this trade here, you'd want to be paying real close attention to the 88.42 to 90.45 area. That is on light sweet crude. Let's switch over to the ETFs. Let's go switch over to the 5-minute charts. Let's see what kind of volume it is that we have out here. And so let's start off with the Qs on the 5-minute. So the Qs pop up with 3 million shares. Then do 900,000 shares, currently in the trading session that just ended. Looks like it just began. So 900,000 shares is the number. What was it doing at the bottoms yesterday? Doing 100,000 shares, 300,000 shares as it was at the bottom. So what is the 5-minute chart running into up here? It's running into the gap that it's closing. That gap up there had 1.5 million shares. So 1.5 million shares up at the gap. Today you had 3 million shares as you gapped up. So not too shabby. Let's go take a look at the SPYs. The SPYs on the 5-minute chart trading out right now at 134.94. Gaps up this morning at the with 7.5 million shares at the open. The next go round, you have 4 million shares. So it's doing an average of 4 million shares. If we go take a look at the dailies, let's just switch over here to the daily ETFs. I've been trading for 17 minutes now. I'm not going to do that. Been trading for 17 minutes. I'm not going to try to convert the volume out here on the ETFs. Let's go take a look at what that was going against. Let's see here. How do I do this? Well, we got a caller on the line. Let's go to Jeff in Manchester, New Hampshire. Jeff, thanks for calling. Thanks for holding.
Thanks, Steve. Enjoy your show.
Well, thank you. I really appreciate you listening. Tell me what you'd like to do today. Tell me if you're long or short, or you're looking to get in, or
looking to get into Goldcorp.
Okay, so GG is the ticker symbol out there, trading out right now. Looks like at 37.48. Let's pull the stock chart up here, and so you getting ready for July 4th?
Yeah, actually, a nice weekend. It's gonna be nice and warm up here. So.
Oh, good. I'm glad to hear that. Okay, absolutely. So you got Goldcorp gapping up this morning, trading out at 37.47, trading off of its session highs. Goldcorp yesterday, so let's clear the chart here. And if you're watching us on TigerTV, one of the first things that we're doing is taking a look at Goldcorp traded down yesterday. And if we take a look at the swing point that it was trading down into, Jeff, it was the May 30th swing point. That had 6.3 million shares. Yesterday, you come down to it with 6.8 million shares. So you never really like to see as a price is coming into a swing point, you don't like seeing it come into a swing point with more volume.
Okay.
And it stopped just before it. So what I would do, how I would take a look at this trade, is you're going to have to wait till we get back from the break.
All right, no problem.
All right. Folks, we're on the line with Jeff. We're taking a look at Goldcorp, and it's going to be nice up in New Hampshire this week. It's going to be nice down in Florida as well. Come visit us, and visit us at Suite 618. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Welcome back, folks. You got the Dow up 186, S&P's up 21, Composite up 47. Over in Europe, you're still up 3.5% plus. So the DAX up 223, FTSE up 100. And we're on the line with Jeff in Manchester, New Hampshire. We're taking a look at Gold Corp, and Jeff is interested in getting in on Gold Corp. And we started off taking a look at yesterday's action as it was coming back into a swing point. Now, the swing point that it was coming back into, folks, was May 30th. That swing point had 6.3 million shares. Yesterday on the pullback, 6.8 million shares. It's trading off of its session highs. Now, what I'm doing, Jeff, here is the very first thing I'm doing is just simply going into the 10-minute chart. I believe that's what I had up on my screen, just to see what was happening. Now, on the 10-minute chart, at the 9:40 time frame on June 26th, so at the open, there were 985,000 shares that traded. And what Gold Corp did this morning is it got up into that, but it got up in there with only 318,000 shares. So it doesn't seem like, at this stage it's got enough to bust it up to the upside. We know that coming down into that swing point it had volume. You don't necessarily like to see that. And the next volume bars on the low of that 940 session is at 37.45. You're trading at 37.33 right now. Seems to me like what it wants to do is it wants to come down and test the bar from 10 o'clock yesterday on the 10-minute chart. That has 768,000 shares. The high of that, 36.74, low of 36.22. Now, just based on the way that it's trading right now, it's not going to necessarily have the volume to bust through that. Again, that is 768,000 shares, and in the last 10-minute session, 253,000 shares. So a place where you can consider maybe scaling into this, if you'd like to, would be as it gets to that 36.74 mark. Now, if you have a charting service, I would be taking a look at that. I would go ahead and mark these points, and if you're coming in there with increased volume, even if it's not 768,000 shares, but on the 10-minute chart, volume starts increasing as you're coming into it, then what you want to do is the ideal trade on this on the daily chart would actually be a test of that swing point low out there at 35.19. But you may not get that. What it also did yesterday was it came back to the 0.618 retracement area at 35.63. And, and what was also going on yesterday, which makes a lot of sense, is, there's turbulence here that goes back to April 26th because it's got 18 million shares, and so the last time that it was up there testing that was about 4 days ago on Monday, on the 25th. and that only had 6 million shares as it got up there. So it's I think it's really setting up an A to B equals CD up pattern, and you could start, scaling into it. If we take a look at, if you were using my position size calculator, what this would, if we took a look at the average true range on this, on GG, Gold Corp, what we would find here is that your average true range on a daily basis is $1.27. So your stop needs to be at least $1.27 below your entry price.
Okay.
And preferably $1.27 times either 1.618 or $1.27 times 1.272. I would use 1.618 and then maybe just take a scale into it.
Okay.
All right.
Fantastic.
Okay. Hey, thanks for calling and have a great weekend.
Thanks, Steve. You do the same.
I will. Folks, stay tuned because coming up next is going to be myself. Daryl Martin is going to join me for a while as we take a look at the Nadex platform. As we leave you got the Dow up 192, S&P's up 21, gold up $46, King Dollar back $1.29. The fireworks, folks, have started, and the Kool-Aid is being served. Oh, yeah. Take care, folks. Have a great Friday, and I'll see you Monday morning if you're taking off. Bye-bye now.